The first one, writing your own script. So again, when regulators, loan review comes in, stakeholders, board members, whoever it may be, comes in and says, hey, I've got questions around this. Again, we're getting to write our own script. So the thing we get most often is, yes, you're growing really fast. And I say, we are growing fast, but I'm mitigating that risk and I'm growing with prudent and safe and sound measures. So this is, again, actual data. So when the regulator comes in and says, Zane, you've grown your portfolio from literally nothing in 3 years to $206 million. I say, yes, you're exactly right. But we're doing it with a weighted average LTV of 60%, 59%. So yes, we are growing, but we're not growing with 80, 90% loans. And we're getting a yield of 7%, which is probably in the 90th percentile in the market. And so you're starting to see that you're getting to write your own story. When someone comes in with questions, you're able to answer those with actionable, real data. Staying ahead of the stress markets. I mentioned it there. Regulators are big on, you need to be stressing your portfolio. Absolutely, every banker needs to be stressing their portfolio. And for those in the polling question said you didn't know your weighted average LTV, that's why you need to be stressing your portfolio, because you know what that loss given default is. If you have a default, I know what it is. So yes, I think stressing is important to us. We do stressing from a top down, bottom up perspective, but my loss given default is, I know it. It's very slim. 60%. I've got to have compression of 40% value in my portfolio before I even lose a penny on anything. Again, this is a broad stroke. There's going to be some that are higher, some that are lower, but overall, I know how much stress my portfolio can hold. And then they say, well, this is your portfolio wide. What about this segment? Sure, stakeholder, sure, regulator. I can come in here, and what if they have questions on my hotel portfolio? Well, I just slice and dice it. Here's my hotel portfolio. My hotel portfolio is 66% LTV. So it's a little higher. I'm getting compensated for that risk at 8% yield. And oh, by the way, I've got a short maturity from my perspective. I'm not going out and doing 30-year loans. I'm doing more 5, 10 year loans. The last one is knowing your credit portfolio better than your regulators. I kind of went into that a little bit with these. What else I will show y'all is the trends. Is if I get out of here. So this is, everything's, again, actionable. So this is my last month data. I can come in here and see, let's see what happens here. 59.95% with 206 in exposure, 166 loans, 7% yield. If we start getting different data sets, I can see, well, my yield is going up. That makes sense because the rate environment is going up. My LTV went up just slightly. Again, I'm not too concerned about that. And I booked 4 loans this month. Other things you can toggle in and out here is anything's customizable in your fields. And so you can work with David and his team. They give you this pivot table and then you can customize it as you wish. So I've got it how I like it. If I want to see just what my one loan officer is doing, I can come in here and toggle his name on, and it only will give me that lender's data. If you want to say, well, how many loans are floating, how many are fixed, you can come in here and here's all my floating loans, 107 million out of 200 million. So roughly 50% of my loans. So you start getting in here and playing with it. You start seeing how you go from that reactive to that proactive and start writing your own story with your stakeholders.